Hi there, Shingirai here again with another update on portfolio performance over the past week. On a relatively risk-off week, we did see 10 out of 10 of the CBAM portfolios outperform their respective benchmarks, with returns ranging from CBAM 4 returning minus 1.31% up to CBAM 1 returning 0.43%. Again, in a week that was largely driven by angst coming from the financial sectors of global markets, much starting off in the United States, and that contagion effect spreading over to Europe and the United Kingdom, as we'll see in today's trading coming on Friday, where the FTSE 100 and the Euro stocks down more than 2%. In today's trading on the back of some counterparty risk from some of the large financial institutions, as well as the US Treasury announcing that there wouldn't be any plans for insurances across all deposits in banks. And that would see over the week some yield coming down in terms of treasuries, and the top three performers all being treasuries across the UK gilts, European government bonds, and also Japanese government bonds, up more than 1.74% on the 1 week basis. And then switching over to that risk-off side of the argument, we would see detractors from performance across iShares Global Clean Energy, UK FTSE 100 and the FTSE 250, which also have inherently that large allocation towards financials and investment trusts, both being down more than 3% on the 1 week basis. Most notably here, there was no to hide in the equity markets, with our hypnosis positions, BlackRock UK, European equity, US equity and equity Indian subcontinent all down more than 2.36% on the 1 week basis. Switching over to a quarter to date basis, 1 out of 10 of the CBAM portfolios outperformed its respective benchmarks, with returns ranging from CBAM 5 returning minus 0.18% up to CBAM 1 V2 returning 1.85% on a relatively risk-off year. Although that only started over the past 2 to 3 weeks, we've seen that reversal in equity markets from risk on to risk off, and that would see your top performers being Allianz European Continental Equity, Pictet Global Clean Energy, and Bailey Gifford Europe up more than 6% on the year, after that sharp derating that we did see in European equities and selling off more than 50% across European equities in 2022, and that recovery trade coming back online after a warmer than expected winter, and also that's China reopening trade really spurring Europe on. In terms of detractors to performance, we continue to see headwinds for iShares Global Clean Energy, JP Morgan US Equity Income, and Equity Indian Subcontinent as well. And the story here being for US Equity Income, the JP Morgan position holding a more than 20% allocation to financials, which of course over the past fortnight or so have had a relatively difficult trading period, down more than 6%. And then the story is on the concerns of economic growth and also persistently high inflation in India, causing the equity position to pull back more than 5.5%. But most notably here, seeing that shift from risk on to risk off, that would see some of our government bond positions up more than 3% on a quarter to date basis, both across Europe, the United States and the UK as well, gilts up more than 3%. But this week has been relatively interesting, seeing some central bank decisions coming out of the UK and the Fed in the US, both choosing both choosing to increase interest rates by 25 basis points at their last meeting, and then just coming into the back of today's economic data, some PMI data from Europe, and as well from the UK, indicating some softness in manufacturing data, but some relative strength in services data. Thank you for listening, and catch up with you next week.